All right, if you're buying, selling, or refinancing a home anywhere in Baltimore, you know the appraisal can feel like a total mystery, right? It's like this black box that decides the fate of your deal. Well, today, we're going to crack that code wide open.
So picture this. You find the perfect row house in Federal Hill, or maybe a gorgeous colonial out in Roland Park. You and the seller agree on a price. Everything's looking good. But then comes the big question. Who really decides what that house is worth for the loan? Is it you, the seller, your agent? Who calls the final shot?
Well, the answer might actually surprise you. It's your lender. That's right. The bank, the mortgage company, the institution putting up the money, they're the ones who decide what kind of valuation they need to protect their investment.
And that's exactly what we're going to get into. We're going to break down the different kinds of appraisals your lender might pick, the logic behind their choice, and this is the most important part, how understanding all of this puts you in the driver's seat. So, you can think of it like this. Lenders have 4 main tools in their appraisal toolkit. They range from a full-on, boots-on-the-ground inspection all the way to a quick look from a satellite just using data. Let's dig into each one. First up, you've got the gold standard, the full or traditional appraisal. This is the big one, the most thorough option you can get. A licensed appraiser physically comes out to the property. They walk through every single room, they measure, they inspect the outside. They're looking at everything from the foundation to the shingles on the roof.
Now, this one's going to be the most expensive and take the longest, usually a week or 2. And it's pretty much always required for government-backed loans like FHA and VA. For Baltimore specifically, this is essential for our incredible historic homes in places like Fells Point or Bolton Hill, especially if a CHAP tax credit is involved.
Next, we have the hybrid appraisal. This is a newer, more efficient way of doing things. Think of it like a tag team. One person, it could be an inspector or even a real estate agent, goes to the property just to gather the facts. Take photos and measurements. Then, they send all that info to a licensed appraiser who analyzes it all from their desk to come up with the value. As you can imagine, this approach is a bit faster and a little cheaper. It works really well for refinances or for homes in neighborhoods with a lot of similar properties, like in Canton or Riverside, because there's just so much good recent sales data for the appraiser to work with. Then there's the drive-by. And yep, it's pretty much exactly what it sounds like. An appraiser literally just drives by the property. They assess the home's condition from the street, check out the neighborhood, and take some photos, but they never set foot inside. This method is super fast and affordable, but it's really only used in low-risk situations. A perfect example would be a refinance where the homeowner has a ton of equity built up. Lenders are comfortable with this in really stable, well-kept neighborhoods like Guilford or Roland Park. And finally, at the far end of the spectrum, you have the desktop appraisal. This one is the most hands-off of all. No one visits the property at all. The appraiser determines the value entirely from their computer, using public data like tax records, old MLS listings, and other available information. It's the fastest and cheapest route by far. But, and this is a big but, it's only for the absolute lowest risk loans. Think refinances where the loan amount is really small compared to the home's value, or maybe a brand new house in a development where there are tons of recent, nearly identical sales to look at. So let's just zoom out for a second and look at the whole picture. You can see there's a really clear spectrum here, right? On one end, you've got that full appraisal. It's super comprehensive, but it's also the most expensive and time-consuming. And way over on the other end is the desktop. It's fast, it's affordable, it's data-driven, but it's only going to work for the absolute safest bets. So, that brings us to the big question. How does your lender actually choose between these 4 options? Well, it's not random, I can tell you that. It all comes down to one thing: assessing their risk. They're basically looking at 4 key things. First, the loan-to-value ratio, or LTV. Basically, the more of the home's value you're borrowing, the more risk they have, and the more likely they are to order a full appraisal. Then there's the loan type. We already know FHA and VA have their own strict rules. The property itself is huge: its age, its condition, its location. And finally, your own financial picture plays a role. Okay, now this is where it gets really specific to Baltimore. Our city is not a one-size-fits-all kind of market. The appraisal approach that works perfectly fine for a new build out in the county just won't cut it for a 200-year-old row home in Mount Vernon. It's a different ballgame here. For any property in Baltimore's historic core, a full appraisal is pretty much non-negotiable. I'm talking about neighborhoods like Federal Hill, Fells Point, Mount Vernon, Bolton Hill, Station North. You just can't assess the unique character, condition, and value of those properties from a computer screen or the window of a car.
This becomes even more critical when the CHAP tax credit is in the mix. You know, a veteran Baltimore appraiser, Ed Drost, really hit the nail on the head. He said that valuing a property with that credit requires specialized local expertise to get it right. It's not something just any appraiser can do, and it can seriously impact the final number.
And this just proves how incredibly diverse Baltimore's neighborhoods are. The style of home, the character, and the property values can change dramatically from homeland to Hampton, right? A great appraiser understands these local nuances. They know that a comparable sale from one neighborhood might be totally irrelevant just a few blocks away in another.
Okay, so knowing all of this, what can you actually do to get ready for an appraisal? Let's run through a quick and easy checklist, and we'll focus on the most in-depth one, the full appraisal.
First, take care of any small, obvious repairs, a leaky faucet, a broken doorknob. Second, and this one is huge, have a list ready of all your major improvements and renovations, and if you can, have the permits handy. Third, if you have a CHAP tax credit, get all that paperwork together. Fourth, make sure the appraiser can get into every part of the house, attic, basement, all of it. And finally, hey, if you know a neighbor just sold their similar house for a great price, don't be shy about providing that info.
So we'll leave you with this one question to think about. Whether you're buying a new home or refinancing your current one, your entire transaction is riding on this one number. And in a city as unique, as historic, and as diverse as Baltimore, having an appraiser with true, deep, local expertise isn't just a nice to have. It's absolutely essential.